So today we're going to be covering the new P&L tab in Viper. You'll start to see it along the top of your program tabs header. So right here, we're looking at the 2019 sales incentive for Taylor Industries. And you'll see this new tab here along the top. Excuse me. It currently will only show for administrator users. That's something we may change in the future with client feedback from people like you. But currently it's only available to admin users. The concept of the profit and loss tab just contains more higher level financial information. And so depending on your preference within your DMC, let us know if you want that to be open to everyone or potentially just to admin users. Okay, so we're going to start by taking a peek at the P&L tab just so you can get a quick glance at it. Then we'll make a few changes to providers and billing, and you can see how those changes are reflected in the profit and loss tab. One thing to take note of before we jump to the P&L tab, I want you to see that here in the estimated values area of this program, you can see we have some estimates entered at $40,000 estimated value. That's the total price the client's going to pay, basically their budget that they've given you. And then we have an estimated markup or a target markup we're shooting for, which would be 30% for a total profit amount of about $9,200. Okay, so keep that in mind as we go to the P&L tab. So the purpose of this new profit and loss tab is to give you an idea of how your financials are going for any given program as you move from those initial estimates, which you can see down here. We'll come back to this upper area in a moment here. So the purpose is to allow you to compare your estimated values, which you can see match what I just showed you on the program details tab there, the $40,000 estimated value, our estimated markup amount and percentage there at the bottom. And so as you start to build out your costings with actual line items and you're coordinating with vendors to confirm prices are accurate and so forth, so you'll assemble your costing, and that's where this column is coming from. This data is coming from your costing for this program. So you can see our total price is $35,000 with tax, and then if there are any tax or commission amount entered into your costing, into the tax or commission column, those would be subtracted to get to your total price. And this is essentially your take-home price, what the DMC or your company stands to make after commissions and taxes are paid out. We then have the gross cost, which of course are payments that will be going out to vendors, typically staff, whoever it may be. But that, of course, is taken out of your total price to get to your total markup here of, in this case, $7,000 and a 25% markup on this particular costing. Now you can see these numbers are fairly close to what your estimates were. One thing to keep in mind is that your total price is a little low here. So maybe you're not done yet working on this costing. You still have another $5,000 or so to build into the budget if you wanted to, which is where you could potentially make up some of those shortages on your target profit numbers down here. Okay, but this just serves as a good comparison between where your current costing is at right here and then where your estimated values were when you started to build the program. Now, on the right side here, you can see this payments information. So at the end of the day, you're only going to make as much money as you receive from the client, and minus any money that has to be paid out or was paid out to providers. So technically, at the end of the day, your profits may not match exactly what's in your costing. Maybe there was a logistical mishap and you had to give the client a credit or something like that. And so the difference between what was actually paid to providers and what you charge the client might change. So those are going to be reflected in the payments here in terms of what was actually billed to the client, what they were supposed to pay, what they actually paid, and the same for providers, what you were supposed to pay, what you actually paid to your providers to get to your final balances here. All right, so ideally through the life of the program, you do want these to match at the end of the day. So your costing can continue to be updated with any of those changes. As I mentioned, the logistical mishap, best practice would be to update your costing to reflect that change. Maybe you gave the client a break on a bus or something like that. You didn't charge them for it. So whatever those changes might be, you want to log those into the costing so that ideally, again, at the end of the day, these numbers all match up. Your cost total paid out to providers should match, and then your total price what was charged to the client and what they paid you should match up. And so we'll see that hopefully come together here in a moment as we add some more information. All right, so before we leave the P&L tab, one more thing to show you, and this is a big deal for most DMCs and MICE companies. So as you're working on a costing, you're adding in different activities and staffing and all those different elements that make it up. Oftentimes there are certain categories or classifications, as we call them in Viper, that may have a higher markup than other types of products. And so obviously if you can sell more of those products, that's better for you. Or if you can try to bring your markup up on certain types of products, whether it's transportation or staffing, whatever it may be, you can look at this information to start to get an idea for what changes you might need to make there. So the classification totals that you're seeing, similar to the costing where everything is organized by event, what this report is doing here in the classifications area is it's organizing all of your line items by classification and then tallying them all up. So your totals for activities, basically all of your line items in this costing that are classified as activity products or activity line items, you've got a total of $31,000, a markup of 21%, profit of $5,500, and a total cost of about $25,000. And then you can see the same for the rest of our categories there. If you think back to our previous webinar, remember that these classifications can be customized now. So if you want to hide any of our default classifications, you can now do that through the admin site. And you can also rename those classifications if you want to create different classifications or categories of products that you want to see in your reporting. All right, so you can see here that my classifications totals of 35,000 matches up with my total price. So we're basically tallying here all of your products by classification, and it ultimately should equal your total price with tax. And you can see for the gross cost there, 28,498, matches up with my total cost here at the top for all my classifications. Now, if you wanted to, you can filter by classification here. If you just want to look at activities and transportation, for instance, oftentimes those go hand in hand. You could just look at those products, refresh your screen here, or refresh your report, and that's going to give you a total of just those two classifications. You can see the total here is 35,000, a markup of 24, markup amount of almost 7, and total cost of 28. So you can start to use the filters at the top to combine classifications if that's helpful or meaningful to you to further analyze your profits, sales, and so forth. I'll just clear this filter here. Another option you have is to show your line items. So if I check that box and hit refresh, it's going to show me every line item organized by classification. So by default, we don't show the line items because this is intended to just be a high-level report. But if you did want to show all of your line items from the costing, they're now organized by classification instead of event, and you can review these and make sure everything is in the right place. So at first glance here, everything appears to be classified correctly. You can see here arrival signs is listed under miscellaneous. Maybe you really want that to be under transportation, let's say. So you could change the classification if you wanted to be under miscellaneous instead of transportation. So this is just a good way to review your products, make sure they're classified correctly if you wanted to. All right, so that's the rundown on the report itself. Now, I want to put in some billing information for our clients so we can start to see some of this payment information start to populate. You will see that under the cost here, meaning these are payments scheduled to go to providers, we do have one payment scheduled for $3,000. So that's probably a deposit in order to get a hold on something. We haven't yet paid it. You can see none of it's been processed, but we do have a scheduled payment of $3,000 to go out to providers and nothing currently scheduled or received from the client. That is because we haven't actually created a contract for this client and even established a payment schedule. So let's say that you've gone through the process of creating your proposal, creating your costing, you've got things pretty well buttoned up and the client wants to contract with you. So at this point, we'll generate a contract through the Contracts tab. I won't go into too much detail on how to generate a contract or what you can fill in here. We can save that for another webinar. But what is important here is our payment schedule here at the top of the contract. So typically when you generate a contract, you'll also establish this payment schedule. And our default payment schedule here in the Viper site, in the demo site, just happens to break it down into 4 different payments. And you can see that my total 35,687 matches up with my sales costing total 35,687. All right, so we'll confirm that all the other details to go into this contract are correct, and we will create this contract. So obviously this contract can be sent off to the client for signature, and then you can add that received contract here. But what I wanted to show you is the billing tab now. All right, so under billing, you're going to see that payment schedule that we just established. And at this time, let's say maybe 24 hours has gone by since we generated the contract, the client's agreed to it and has seen the payment schedule. Let's say that they send in a payment for, let's say $4,000. They're going to overpay on their deposit just slightly. So let's say it's tomorrow, hypothetically, and they've paid $4,000. And this is for the deposit or initial payment. All right, so we'll hit OK, save changes. And so now we've got some data to work with that's going to populate into our profit and loss report. All right, so once those have saved, that's going to trigger a notification to your accounting staff as any changes due to billing schedules. And if I go back to my P&L now, we should have some additional numbers in the payment side for the client. So you can see right here under payments now, scheduled, this was 0 before. These are scheduled payments owed by the client. So we're now at 35,687, which is great. It matches my costing. Now, as you might operate this program and you're adding services or removing them from the costing, you want to keep your payment schedule with the client in sync. So whether it's adding payments or removing payments that the client owes, or changing the amount that they owe, you'll want to keep those two in sync, your costing total and the client payment schedule. You can see we've received $4,000 from the client for that deposit, leaving our balance at $31,000. The provider payments down here, let's go in and add one more payment so you can see how those populate. So if we go to the providers tab now, we can add some additional scheduled payments here. So looking at the top, you can see that I get a summary of my scheduled payments for providers. We only have 3,000 scheduled thus far. None have been processed. But the good news is, or a positive thing here, is our costing does match our provider totals, meaning every line item in our costing is assigned to a specific provider, meaning that we can track our payments to providers and make sure that everything matches up between our costing and our estimated or expected costs and what we actually end up paying out to our providers. So if I go down to, let's say, under ABC Transportation, or let's pick one with a little bit of a larger bill. So under Better Late Than Never Transportation here, we've got 2 different motor coaches we're using throughout this program. We're going to click into Manage here. And from the Manage area, this is where we can add payments for a provider. So let's say we've gone back and forth with the provider using that new Viper vendor functionality. They may have indicated in one of their messages when you owe them that deposit or second payment, third payment, and so forth. So as the operations manager or whatever your role might be in this program, if it's related to managing your providers, we'll put in here that let's say $1,000 deposit is due on the 30th, the end of this week. And we'll log that in there. And then we can also add another payment for $800, which will get us to the total balance that we owe them. You can see the total cost here is $1,800. We already have a deposit scheduled for $1,000. Viper calculates the difference automatically, and we'll call this final payment, which is due after the program. Let's say 10 days after the program starts. Okay, so that's is going to give you time to reconcile the bill and make sure everything goes as expected. We'll hit Save Changes here. And now you can see that our total cost for the provider matches the scheduled payments we have for them. And again, anytime we make a change here to the payment schedule, that's going to send off information to your accounting staff based on the email address you have set in your admin site. All right, so they know to put that into whatever your accounting software is and actually send those checks or credit card orders to make these payments. And then once these payments are made, so let's say this one's made ahead of time, accounting got that notification that said, we're just going to go ahead and make this deposit today. So it's going to be paid today, $1,000, and we'll say, deposit paid, and maybe you indicate the last four of the credit card number, or if it's a check number, you can indicate that there. You can even attach the invoice using that paperclip icon there if you wanted to attach the invoice or receipt from the vendor to these payment schedule items. All right, so at this point we have a balance of $800 with this particular vendor. We've paid $1,000 of the $1,800 total that we're anticipating. All right, so I'll jump back to my main provider screen here. All right, so we do have a question from someone there in the window, which I'll address here in just a second. So someone had asked about entering P&L information or payment information for past programs, and I'll cover that in a second once we get back into the P&L tab. All right, so what we can see here on our providers tab, we have $4,800 in total payments scheduled. You'd want to go into every provider and make sure that that your scheduled payments matches what you anticipate being your total cost, about $28,000. Okay, so obviously we've only entered a small fraction of what our total payments potentially will be to this to our providers for this program. All right, so if we jump back to the P&L here, profit and loss report, we'll start to see some additional changes based on what we just did there in the providers area. So you can see our scheduled payments from the clients have not changed, but the scheduled payments with our providers have. So our total scheduled now is $4,800. Again, you want that to be up to $28,000 when all is said and done, meaning that all of your costs are accounted for in your payment schedules. And processed here, you can see we've actually sent $1,000. Remember, I indicated that $1,000 deposit had been sent to Better Late Than Never Transportation. So those are our processed payments, meaning actually paid to our providers. That money has come out of our bank account, leaving our provider balance based on scheduled payments at $3,800. Obviously, $4,800 minus $1,000 gets you to $3,800. So at the bottom here, our projected numbers. Our projected profit is $30,000 just based on our payments right here. Obviously, that is not accurate because we have only scheduled a fraction of our vendor payments, right? So again, that should be around 28, which will even things out so that our profit based on payments should be somewhere in the realm of $7,000. And then the purpose of these scheduled, processed, and projected, collected, and owed is so you can monitor potentially what you still stand to make on this program. So from a cash flow perspective, especially for users that do not have access to QuickBooks or whatever your accounting software is, it can be helpful for account managers to evaluate what the potential cash flow might be on this program. So you can still see here that you're owed $25,000 based on your payment schedule. Again, you'll want to make sure that your gross cost matches your scheduled vendor payments to really get accurate numbers here. But when this number here, like for instance, if this was a negative number, that would indicate that you've already collected your entire balance from the client, but you still have a lot of money that's owed out to your vendor. So that's where you'd have an owed balance here of a negative amount. And so maybe you want to alert accounting or managers or owners that just a heads up, we've already collected all the money on this program, but there's still a lot of money to be paid out to providers. So don't go throwing a staff party just yet. We want to make sure that those are paid first, and vice versa. Maybe you have most of your provider balance paid off, but there's still a bunch to be collected from the client. This owed number would then be a very a large number in the positive. So at the end of the day, your projected here should be your scheduled payments for your client minus scheduled payments for vendor, which should match your markup amount here for the costing. Collected should be the difference between your markup, between what was collected from the client and what was processed to the vendor. And then at the end of the day, your owed amount should be zero, meaning that the what is owed by the client and what is owed to your providers, that those should balance out so that there's an owed balance of zero. All right, so there's a lot to take in on this report. There's a lot of information between these bottom summary values and the classification totals up top. So as this starts to roll out to your sites, you'll get that notification across the top of your screen indicating that your site's been updated. Encourage you to check out the P&L tab and see how those numbers shake out. And if you have any questions or even feedback, suggestions, don't hesitate to let us know with the support button there. Now, before we wrap up, I do want to check on or rather answer the question that was asked earlier. So someone had asked, what about programs that have already been closed this year? Meaning you've already built out the costing and operated the program and things are closed out. You don't need to go back on those and necessarily update your payments for providers or update your payments for clients, depending on which parts of Viper you've been using and to what degree. That's going to impact, obviously, what payment information you might have in there. So you don't have to go back. It's not going to affect your reporting on a global level at this point yet. We will likely add P&L information to the global report so you can see pending outstanding payments versus pending outstanding, or I should say pending receivables, meaning money owed to you, versus pending payables, meaning money owed out to your vendors. So definitely using the two payment areas for providers and clients is going to help get more and more accurate reporting, especially in relation to cash flow management. But at this time, you don't need to necessarily go back and add payment details for programs that have already closed this year. All right, so unless there's any other questions, we can call that a wrap for today's open webinar. Again, any feedback, questions, you can submit those through the support button, and hope to see all of you next week on the open webinar next Wednesday. So have a great day, everyone, and I'll talk to you soon. Bye-bye.